Unfortunately, for most of us, taxes are one of our biggest expenses. And whether you're 40 or 50 years old or you're already retired, we all need to worry about taxes, particularly for retirees, because we tend to underestimate that cost in retirement. So, in today's video, I want to talk to you about one of the IRS's best kept secrets for retirees. And we're going to start off with an excellent article by Kate Dorr on CNBC, and the article's titled "This Tax Move is One of the IRS's Best Kept Secrets for Retirees." And it starts off talking about taxpayers age 70 and a half or older. They can transfer money out of an IRA for 2025 without adding to their adjusted gross income, and this withdrawal can even satisfy their minimum required distribution once they turn 73. So, what's what's the secret that we're talking about? First, I want to attribute the quote and the title of this article. It's a quote by Ashton Lawrence at Mariner Wealth Advisors in Greenville, South Carolina. And let's talk about how the qualified charitable deduction can help seniors deal with one of the biggest sources of stress, one of the biggest potential sources of income and income tax for them. Before we do, I also want to say that not only are taxes one of the expenses that retirees tend to underestimate, the other one is healthcare expenses. And I mention this because as this video comes out, the annual enrollment period for Medicare runs October 15th to December 7th of 2025. And whether you're on Medicare or somebody you know is on Medicare, it's super important that every year you look at your plan and make sure it's the right plan for you. And that's why I'm proud to partner with this video sponsor, Chapter. Chapter is a Medicare advisor that's always free to you and I to use. And I agreed to partner with Chapter for three main reasons. The first one is their services is free to you and I. The second one is their average client saves $1,100 a year. That's real money. That's almost $100 a month. And the third one is the most important reason I agreed to partner with them. And that is if you are on the right plan for you, they're going to tell you that. And that's what I want for you. And that's what you want for yourself. You want an expert that's looking at your situation and bringing their expertise to give you the best advice for you, as opposed to the advice that maximizes their commission. Again, you can reach Chapter at this link below, or pro tip, all Medicare advisors are about to get busy. You can call them on the phone number above. It only takes 15 minutes and you could save yourself substantial money. Thank you again, Chapter, for sponsoring this video. Okay, so how do these qualified charitable deductions, how do they work? Let's go back to the CNBC article. They've got a couple steps that they walk us through. Number one, when filing your taxes, and most of us are going to claim the standard deduction, or we have to decide if we want to itemize it. Whichever is greater is what we're going to use. For 2025, the standard deduction is $15,750 for single filers and $31,500 for married couples filing jointly. Your itemized deductions may include limited tax breaks for charitable gifts, medical expenses, and state and local taxes, among other things. But here's the problem: 90% of filers don't itemize. And the reason for that is their standard deduction is so high. So, that charitable deduction, a lot of people look at it and say, well, why would I do a QCD, a qualified charitable deduction? We're going to talk about why you would do it. But first, I just want to admit and bring up the fact that all of this is really complicated, which is why it's important you have a financial plan, because you don't want to waste money on taxes that you don't have to pay. Personally, I am happy to pay every dollar of tax that I legally owe, but I don't want to have to pay any more than I legally owe. And that's why we all should have a financial plan. The gold standard is to work with a financial advisor. If you'd rather do it yourself, use software designed for you. The software that I like is called Bolden, used to be called New Retirement. You can sign up for them here in the link below, but their software is powerful, it's easy to use, and it's super affordable. probably less than most of us spend going to a month. It costs less than what most of us spend going to a coffee shop one time. So, anyways, that's the software I like. I highly encourage you to use it. I am an affiliate of Bolden, so if you use that link, if you use QR code, you'll be supporting the channel. Okay, so if we're not itemizing, then how does the qualified charitable deduction help us? Here's what the CNBC article says. There's no tax deduction for a qualified charitable deduction, but the amount distributed to us is excluded from income that if it came out of a regular IRA, it normally would be considered ordinary income. And according to Juan Ross, who's a CFP and a partner at Forum Financial Management, he says that the amount distributed is excluded from income, which is better than a deduction. Now, why does he say that? He says that because qualified charitable deductions won't increase your adjusted gross income or your AGI, which can boost your premiums from Medicare Part D and Part B as your earnings rise. And also, reducing your AGI can also minimize phase outs or benefit reductions for other tax breaks. So, keeping that AGI low is important. Okay, so RMDs, another benefit of qualified charitable deductions is that the transfer can help you reduce your yearly required minimum distribution because once you're 73, the money that you send over counts as part or all of your required minimum distribution. Again, I mentioned earlier what the annual limit is. Let's see if I can find it. It's $108,000 for 2025. So this can be important, but I want to take a step back and talk about taxes and tax planning and the amount, if you're not retired yet, the importance of having these three different buckets. One is a regular IRA, what I call a tax me later account. That's an important account. The next one is what I call a tax me as I go account. That's an account at your local bank or a taxable brokerage where you're paying taxes every year. And then the final account is what I call a tax me never account, which is your Roth. The reason you want all three is then you can control your tax bracket. The U.S. has 7 tax brackets, 10%, 12%, then it jumps to 22%. There is no 14, 16, 18, 20%. It goes 10%, 12%, 22%. So for many of us, we want to do what financial advisors would call filling up those lower tax brackets. Most of us would be happy to pay federal tax at the 10% or the 12% level. And truthfully, because of the standard deduction, the U.S. really has 8 tax brackets. And the first one is a 0% tax bracket. So we definitely want to fill that one up. So doing our taxes right is important, which is why I recommend Bolden. Again, here is the link for that. If you've made it this far in the video, give me a thumbs up. Think about subscribing. And if you like the types of insights that I share in this video, you're probably going to love my newsletter, my free weekly newsletter. Candidly, my clients, I'm a retired financial advisor back when I was working. My clients paid me thousands of dollars to hear these insights from me. You get them all free, and my best insights come in my newsletter. So thanks for signing up for that. And if you like this video, a super important decision, maybe one of the most important decisions we make after 50 is the age that we decide to retire, which is why I made this video up here. Why waiting to 65 to retire might be a big mistake. Thanks for watching this video. I'll see you in that one. Bye-bye.